Thanks for joining us today as we talk about why U.S. brokerage accounts of American expats are being closed. Introducing a very special guest, Tom Zachystal, today. Now, Tom, you're the president of Individual Asset Management. It's a U.S. registered investment advisor. You guys specialize in investment management and financial planning. What I like about you guys is you also have services specifically for American expats, whereas a lot of people lately seem to sort of be shying away from dealing with them.
Yeah, and I would say it's sort of an opportunity lost, I think. You're closing perfectly wonderful clients because they are overseas, and I think it's just a lot of reactionary fear about FATCA. But whatever the case is, I mean, they're doing it, they've done it, and they're going to continue to do it, and I think that leaves an opportunity for people like Tom.
Yeah, so thank you, Tom.
Yeah.
Tom, you're also the president-elect of the San Francisco chapter of the Financial Planning Association. And your website, how can people find you?
Yeah, that's right, Claudine. Anthony, nice to be with you. And like you said, we're a registered investment advisor. We've been specializing in expats since 2002. Wow. I was an expat myself at one point for 10 years. I worked as an engineer in the oil business for 10 years internationally for Schlumberger. And yeah, the website is just www.iamadvisors. So that's IAMADVISORS.com.
Great. And you know what I love, Tom? That you've had experience living and working overseas. So you know the pain. Expats, there's a lot of roadblocks. FATCA, obviously, is a big problem. Now the new financial sharing where banks all over the world are being forced to share U.S. account holders' information, which is a big problem. And today, like I said, we specifically want to talk about why U.S. brokerage accounts of American expats are being closed. Anthony, tell me your experience, what you've seen so far.
Well, it just seems to be a pretty simple fear that I think some people, we're talking about Merrill, Lynch, Wells Fargo, Fidelity, Morgan Stanley. They go to some seminar and someone talks about FATCA, then someone gets them all scared about it, and then one person says, yeah, we're just not going to take any expats, and then someone else says, well, look, we better do that because it's the safe thing to do. Meanwhile, if I was, I would be a little concerned if I was a shareholder at Wells Fargo to say, well, you're throwing away perfectly good people. Okay. So I would say that's what it is, because it doesn't seem that the compliance cost would really be doing that. It just seems that I think fear and ignorance drove the decision.
Yeah.
That's what I would say. I don't, Tom, what do you think?
Yeah, you're on the front lines of this.
Yeah, that's right. Well, I've seen two issues, really. I've seen the issue of closing brokerage accounts and sometimes bank accounts, but brokerage accounts are the big problem. There's another issue with U.S. mutual funds. Let me just touch on that briefly, because what I've also seen is that mutual funds are, under the law, they're considered investment companies. And so, as the phrase goes, they have to be registered where offered. And if you're living abroad, they're being offered basically wherever you live in your country of residency. And most U.S. mutual funds are not registered in other countries. So the issue with mutual funds sometimes is they get frozen in those accounts when the brokerage firm figures out you live abroad. And by frozen, I mean that you can still hold the ones you have in there, but the dividends aren't reinvested. You can still sell them, but you can't buy new U.S. mutual funds. So that's one issue. But the larger issue, as you said, is with brokerage accounts. And what I've seen is that really, and it's as a result of FATCA, as you said, and FATCA is a reciprocal agreement that was initiated by the IRS. It's reciprocal between countries now. And what it amounts to for U.S. brokerage firms is that they have to start reporting to the tax authority in your country of residency on your U.S. accounts, because the IRS wants the other country to report on the accounts you have in that other country to the IRS. See, so they want it to work both ways, and that's the problem. These U.S. brokerage firms, they don't want to do that. I mean, if it's a $10 million account, they'll probably do it, but Merrill Lynch has sent around letters saying that they're going to close every account under, I think it was $1 million for U.S. expats.
Wow.
And Schwab and Wells Fargo are doing similar things. Yeah. So anyway, as you can imagine, Anthony, this is maybe not such a big deal for if it's a taxable account, you can move the money, but if it's a retirement account, that's a real problem, right?
Oh yeah, we've run into it. Clients of ours forced liquidations of their 401ks, and that's a huge problem. They didn't know, and this is something. And we're really happy to find you, Tom, because this is something we were looking for, someone who could handle this for our expat clients, because we couldn't just a month ago, we didn't have anyone until we met you. So it was something where I told my clients, I'll look into it. I'll try to find someone who can handle it, because it is a nightmare because now you're going to be taxed on something you didn't want to be taxed on. And I think in a little bit, we'll try to talk about some workarounds to that. But right, it's a huge headache. And if people could work before, if they know where they're going to roll it over ahead of time, that's going to save a lot of grief.
Because what will happen is you don't even know that this is happening until you literally get a check mailed to you.
Sometimes.
Is that right?
Yeah, sometimes because maybe the letter wasn't sent to really where your address is. So you can get a check wondering what this is for.
Wow.
Getting through to say, oh, yeah, we closed your account.
Yep. Now, we know there are solutions. We'll talk about that shortly. But as we were speaking with you, Tom, it seemed like there was a pattern of questions we kept coming up with. So we wanted to sort of toss out some of those questions that we've learned are important to ask. Now, the first question, Anthony, you said was the money actually sent to the IRS?
Right. This is so. Let's just say that something bad did happen. That the account was closed out, and you have a distribution, and you didn't have time to roll it over to something. So something that we look at, and you missed that 60-day window to do that. There's still workarounds. So something we want to know is if the money was sent to the IRS, because you could request it to be sent after the 60 days. And that's the other thing too.
Right. And sorry to butt in, but the 60 days, just to clarify what we're talking about, there's two ways to roll over the money. Usually, if you're going from an IRA account to another IRA account, or sometimes you're going from a 401k to an IRA, you do what's called a direct rollover, which amounts to usually an electronic transfer between institutions, right, from one brokerage firm to your new brokerage firm. But what we're talking about is now an indirect rollover, where you've actually received a check for the proceeds, and then you have to write another check to the new institution. And you have usually 60 days to do that, right?
Yes, and thank you for chiming in. Sometimes we assume everyone knows everything here that we're talking about. So that's the next question. Was it within the last 60 days? It is important, but it's not impossible. I think what we're going to talk about shortly is if it's outside the 60 days, it can still be taken care of.
If it's outside the 60 days, it can be. There's no question about that. But the larger issue is, what if it was closed in 2013? That's a little bit more tricky, and that is something where I don't think we can give a clear answer on that. And there's probably a way you'd want to get. I think you'd want to get a legal opinion basically on that. There is nothing that says you can't, but there is suggestions that maybe you can't.
Right. Tom, you had some good points there. Is there a time limit to request a waiver? The RevProc technically sort of refers to 30 days. Is that correct?
Well, I think what it says is that there's a safe harbor, and whenever there are so many gray areas in the tax code, as you know, but quite often we have a safe harbor. And so I think what it says, and correct me if I'm wrong on this, Anthony, is that there's basically a list of conditions why you might not have been able to get it done within 60 days. You didn't receive the letter in time. There's I don't know, about a dozen of those, right? And then when those conditions have been met, so now you've got the letter. If you got it 60 days, then from that time period, there's sort of a 30-day safe harbor. If you get it done within 30 days of whenever that condition has lapsed, then you're safe. I think that's how it is, isn't it, Anthony?
Yeah, that's how it is. And a safe harbor means you're safe. It's a safe harbor, but that doesn't mean it's the only time. There's always something you could say. Well, I'll take a risk. The IRS could come back and say I didn't meet it based on this. And one of the solutions that people do with the larger accounts is they want to know ahead of time. They'll request a private letter ruling. Costs $10,000 just to the IRS to get that ruling. So that's where sometimes you'll want to you will take a guess. Maybe what if I'm wrong? What's my exposure? Do I really meet these? What's the risk? I mean, the thing is you are reporting it. So you're not going to have an underreporting penalty attached to it if you are incorrect. So that you can't go past that 30 days. And you really want to, I think that's really where you want to get a legal opinion on that. It might be worth it. Maybe it's not. Because, Tom, you and I were talking about some solutions. Let's say you did miss it, right? Let's just say, look, we missed it, or it's simply not worth it. What are we thinking there?
You mean you missed the 60-day deadline?
You missed the 60 days, and you're not and let's just say you missed the time period, and you're not meeting one of the conditions. It's really a push too far.
Right, right. Well, so like this, I guess the safe harbor was put in to avoid people having to pay $10,000 for,
Yeah.
for one of these letters, and so you probably want to avoid that unless it's a really big account. But some of the possibilities are if you already have the money, well then it's you've got some options, and you need to look about what these options are. So you can open up an equivalent account. If it's coming from a traditional IRA, then you might want to put it back into a traditional IRA, and then when you do your tax filing at the end of the year, if there's been a tax withholding, and that's another thing we should probably talk about, whether there's been a withholding, then you might get that money back, right? And I think you mentioned there might be some possibilities. You could put that money into like a Roth IRA, perhaps, if it's a significant amount. That's one option. But the other thing to look at is if you already have that distribution in your hands, and well, suppose you're in a low tax bracket that year, it might be a good time to do a rollover from a traditional IRA to a Roth, which is a taxable event. But then when the money comes out of the Roth IRA, it's not taxable anymore. And so you get the tax deferral, and then maybe you'll be in a higher tax bracket later on down the road. That's a good time to do a Roth conversion, and this might be a time to consider it. Or the other thing is, if you have to change financial institutions anyway, then why not look at who you want to use? So we're also a financial planning firm, and I think it's important to consult with a financial planning firm on this. We don't just use one custodian for our client accounts. We have multiple custodians. Some of them have checking debit card privileges. Others have multi-currency accounts. We can wire in and out in multiple currencies. So it's a good time to also consider where you want to park your money, right, if you have to change anyway. And finally, the other thing is, well, when was the last time you looked at how the investments are aligned? I mean, if you've got a distribution and it's sitting in cash, well, then it might be a good time to update your investment profile.
Yeah, it sounds like, so even bad, this is what we, tell people all the time. Something bad happens, it can be made better. It certainly can be. And it also can be made worse, because you were mentioning something earlier before about mutual funds, Tom, and it just, a couple words you do always trigger things off. You were talking about mutual funds, and you were saying, well, they're technically investment companies. Absolutely right. Now, something that somebody could happen, let's say that your U.S., let's say they were forced to distribution because their mutual fund, their mutual fund was liquidated, they're forced distribution, but they want that mutual fund, and they notice, hey, wait, so the U.S. has this mutual fund, but I could see the same mutual fund, it's the same thing, but it's just foreign registered. So let me go ahead and take this, and I'll just go buy it, and I'll buy it wherever else. Well, there's a problem, because that is now a passive foreign investment company, a PFIC. That foreign mutual fund becomes a PFIC, and the problem with PFICs is, number one, the accounting compliance work is terrible. It requires a new form 8621, that there's a failure to file it, and if you don't file it, the statute of limitations is still running on your entire return, and also the tax treatment is lousy. Your losses are limited, and we've done a lot of content on PFICs. So that's really where trying to you want to make sure you get the right advice after a mistake was made, because it can be made better, but it can be made a lot worse.
Yes. So it almost seems like this is going to be, there's no flat answer for everyone. It really seems case by case, and weighing the risks and weighing the rewards. Yeah.
Well, I say case by case. First, I try to plan first. So
right.
If I would say Tom seems like someone to get in touch with.
Well, yeah, that seems to be the thing. We actually have heard people say, I can't find anyone to help me. Nobody wants to deal with expats. And they it's one of those things, Tom, we see when people have tax issues, they really just bury their head in the sand. So it's just so nice to have a contact with you where we know that Tom can handle these sorts of things. And you say to be proactive, Tom. How do you think U.S. expats how do they handle this head on? How do you suggest they address the issue?
Right. Well, I think the first thing is, if you do get a letter in the mail, don't just ignore it, right? I mean, if there's a deadline attached to it, then don't forget that in order to transfer an account, it isn't the kind of thing that can be done overnight. You have to open the account, then you have to transfer the assets, and even if it's all done electronically, it can still take a week or two. So if you've got a deadline, don't wait until the last minute. If you've similarly, if you've gotten the IRA distribution, if you got a check, then there's the 60-day deadline, right? But the other way that you can be proactive is, one thing that I've seen a lot of is a lot of U.S. expats, they actually keep a U.S. address on their brokerage account, probably to avoid this situation. Sometimes it's a mail forwarding service, sometimes it's the address of a relative, sometimes it's just an address they've had for years. But the problem with that is that might work for a while, but don't forget there's this FATCA law now, and these U.S. brokerage firms, by law, they have to know where their clients live, and if they live in that other country, and if there's a reciprocal FATCA agreement, they have to report to that other country's tax authority. So they're actively looking and trying to figure out where their where their clients live. And one great example, I had a guy call me up from Singapore. He had an account with, I think it was Fidelity. And he had a U.S. address on it, and Fidelity was tracking the IP of where he was logging into his account. And so they knew that he was logging in from Singapore for like a year, and they sent a letter saying, and we know you've been logging in from Singapore, unless you can prove to us that you don't actually live there, we're going to have to close your account.
That's crazy.
Yeah, it's crazy. But anyway, they're going to figure it out. They have to do this by law. And so it's what I would suggest, if you have been using a U.S. account and your brokerage firm thinks you're living in the States, but you're not, call them up and say, hey, by the way, what would happen if I moved to Costa Rica or the UK or wherever you live? What would happen if that, you don't have to tell them you're living there right away. You don't want them to close the account on you, but just ask them a what if, and don't forget to ask about the mutual funds if you're holding mutual funds, and then when you know the answer to that, well, probably if you have to do something about it, then sooner is better than later.
Wow, because I meant to ask you that because that seemed a really great workaround. I see Las Vegas, you can get a prime Las Vegas address with a mail forwarding, and it did say one of the services was for U.S. expats, and I know some of our clients did, but that's exactly right. So if you're going to claim you're living in Las Vegas, right, I guess you need to get a proxy for your web. Make sure when you log into your bank, you got to go all the way, get a proxy to show up as Las Vegas.
Wow.
So that seems a little bit involved, or you could just move the accounts and not have any worries.
Yeah, well, let me mention one more thing about that, because there's another aspect to this. It isn't just FATCA. There's also what we call in the industry know your client rules, and these have to do with money laundering. And every institution is supposed to know certain information about their clients, and one of that is that they actually exist. They are who they say they are. Let's put it that way. And the other is that they live where they say they live. And typically the way that's done is you get two documents. You get a proof of identity document, which is something like a copy of the person's passport, and then you get a proof of address document, which is like a utility bill with their name and address on it, or a driver's license or something like that, right? So if in the States, a lot of companies if you put a U.S. address on it, they haven't been requesting this, but they're going to start requesting this, because this is another thing that they're supposed to be documenting for money laundering, and that's pretty serious business these days.
Oh yeah. Oh yeah, we know, right? FinCEN is up in everyone's business right now. Yeah, absolutely, right. And that's a good point.
Tom, something important you said too. You definitely want to deal with a firm that does expat financial planning as well as investment management, because dealing with expats, it's a whole different business.
Well, that's right, and quite often the financial planning considerations are even more important than the investment considerations. I mean, if you're overseas for a couple of years, then probably you can keep your U.S. account. Nobody's really going to give you too much of a hassle. But if you're overseas permanently, or you go from country to country, or you've retired overseas, that's a whole different ballgame. I mean, then we've already talked about the issue of closing accounts. That's a big issue, obviously, but there are other issues. There are issues to do with cross-border taxation and understanding tax treaties, for example, right? As you know, Anthony, that's probably a big part of your business. I mean, a tax treaty can make all the difference.
That's right.
And then there are also estate planning considerations. If you're a U.S. citizen married to a non-U.S. citizen and you're both not U.S. residents, so the other person's a non-resident alien, well, there's an estate planning consideration attached to that as well. Or even things like saving for college education. Say there are children. Well, in the U.S. traditionally we'll do that with a 529 plan. You have young kids, you put money into a 529 plan, it's tax deferred, it comes out tax free when you use it for college. But what about if your kids aren't going to be educated in the States? Does a 529 plan work? And the answer is that it works at accredited institutions. And there are about, I think, 150 of these accredited institutions overseas, but they're mostly in Europe and most developed countries. And so you need to check whether those tax benefits will actually be useful to you.
Yep.
So there are a lot of financial planning considerations, and quite often they really affect us even more than on the investment side.
Yeah, and I mean, there's just so many little things you don't think about unless you are living and working overseas, issues with voting, simple things like that. And I really feel for, with the new passport revocation law that's coming up, I mean, expats and those traveling, overseas and that do a lot for that of traveling for work. I mean, they are really, their passport is the single most important thing to them. So, I just hope that law doesn't affect as many people as we hope. So Anthony, you had some input as well. We were talking about the new president-elect. We had seen some information online that perhaps, some people are thinking about FATCA now taking a back seat, but you don't think that's true?
I don't think so, because if you look at what President-elect Trump is looking to do, he's looking to lower tax rates all around, and he's going to have a limited political capital. And it's sort of a difficult sell based on what he said to say, okay, I'm going to reduce the foreign reporting requirements for people overseas. That might not be the message that plays so well. There's still that conception that people are taking money and hiding it overseas. Well, they're paying taxes overseas as well, generally too. So that's not, necessarily. I don't see anyone's really paid attention to FATCA, and I don't expect that to go away. Maybe through some miracle, and all the other reporting requirements, I don't think anyone's going to touch because most people don't know about them. Yeah. So I think the international issues are going to remain the same. I do expect the tax implications to be less, though, just because the rates hopefully will be going down.
Fingers crossed.
Now, Tom, you're in California, but not right now. Is that right?
No, actually, I am still in California right now, but in about let me see, in about 7 hours, I'm going to be on a plane headed for Hawaii.
Oh. So lucky duck.
Yeah, it's a foggy day in the Bay Area, and hopefully it's a beautiful day in Hawaii.
All right. So like us, you have clients all around the world. It's not an issue.
I do have. Well, I won't say it's an issue. So we can't have clients anywhere. I mean, there are some clients that are, for example, there's this list of OFAC countries, which is what you would expect, Uganda and Yemen, and so there are some countries we can't have clients in. There are other countries we can't have clients in due to licensing restrictions. So, for example, we can't have clients in Canada because we would actually have to be licensed in Canada for that. Oh, okay. But most other countries we can deal with. That's right.
Good.
Great.
All right. Well, Tom, I want to thank you so much for joining us again. Tom Zachystal from Individual Asset Management. Tom, what's the best way if someone has questions, they need assistance, how can they find you?
Well, it might be a good idea to go online and check out our website first, www.iamadvisors.com, iamadvisors.com. And there you can, it's nice, you can find some information on us. There's also a contact form on there. There's a scheduling link. You can, if you press on the scheduling link on the contacts page of our website, then it goes directly to my calendar, so it's easy to schedule a time to have a chat or something like that. And there's no fee or obligation for an initial chat. So probably that's the best way. You can also send me an email to iam@iamadvisors.com if you like. But that contact form works pretty well, especially for clients who live around the world, because it shows up in your time zone. So it's kind of nice
I've used it.
To be able to schedule it that way.
Yep, very easy tool. Your website is extremely informative, so kudos to you for that. So everybody can check out iamadvisors.com. And again, Tom, thanks so much for joining us, because this is a really important issue that people don't quite know how to deal with right now. So the more information we can get, the better.
Yeah, my pleasure. Thanks for giving me the opportunity. I'm glad we can highlight this important issue to many expats.
Thanks, Tom.
Thanks for watching.